good afternoon. You're tuned into Closing Trades on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia as well as Aisha Faridi in the house. And for now, the market is languishing in the red. And quite a bit, in fact, it's 150 points off the highest point of the trading session. Clearly, the market is losing steam because over the last few days, we have seen quite a bit of positive momentum build up. In fact, for 13-14 days on the trot, the FIs have been buying. But for now, we are seeing a bit of a breather as far as the market is concerned. In fact, all the sectors are actually trading in the red today. Mid-caps, which were outperforming in the last couple of weeks, are also on the back foot today. So seeing a bit of an underperformance from the broader markets. And then, of course, the heavyweights, the likes of HDFC Bank, Kotak Bank, ICICI Bank, these are the top drags at the index level. And even IT is putting pressure on the market. So HCL Tech, TCS, Infosys, these are the other key, laggards in the trading session, Aisha. And then, of course, a whole host of result reactions to deal with as well.
Oh, yeah, absolutely. Just came out with Jubilant Foodworks numbers. The operational numbers look quite okay, and that's a positive earnings set. And quite a contrast to Sapphire Foods, for instance, amidst the peer group. There was Sterlite Technology, Credit Access Grameen, Keynes Technology, which of course shot up from the word go. We have the management bite as well. They spoke exclusively with us. We'll try and play that a little later on the show. And then weak numbers from an Oberoi Realty, irrespective of what the sector leader DLF indicated. That's not quite the sentiment coming in from Oberoi Realty. The numbers fell short of market expectations, in the red as we speak right now. JSPL, Zydus Wellness, Devyani International, Hester Bio, they're all a set of weak numbers. For the markets, of course, we have definitely taken a bit of a step back. Right now, we're staring lower by 140 points in the Nifty futures, and we've even breached that 18,200 trend. So yes, just got that close, or rather closer to an all-time peak. From there, a little bit of a retracement coming in. But let's take it across to Kunal and Naresh, find out what they're making of the trading day so far. Kunal, nothing to worry about, or are we going to retrace a whole lot from here?
I think we've already started to retrace quite a bit over the last 2 days. I think we've retraced some 250, 300 points on the Nifty, but we've still not broken any key supports for the indices to start getting into a bit of a wobbly zone for the index where we may expect a follow-through correction. Now, what's actually happened is over the last couple of days, as we were discussing yesterday, that many of the large cap names have stopped rising. So, the likes of L&T, Bajaj Auto, so many of the other large cap names, they actually stopped, or gone into that phase of pause for themselves. And that was one of the major reasons why the markets were unable to break past above their resistances. And so same was the case with the banking index as well, which is actually one of the better performing indices for the Nifty. So I think we were going into a phase of a natural consolidation. Hopefully the correction could probably stall at the 18,050 mark on the spot level. So maybe expecting another 100 points of correction on the index on the spot levels, but I think 18,050 could be a very critical as well as an important support to watch out for.
Okay, so that's the take coming in. Let's welcome in Naresh as well and get his view. Naresh, would you look at buying the dip that we're seeing in the market at this point of time, or consolidation is going to be the color of the day?
So 18,050 is the near-term support. So at 18,100, one could be looking at buying it 18,100, 140. Maybe start off with a 50% allocation right now and add more at 100 points lower. And then keep a stop loss below 17,980. Expecting a bounce back from this zone. We've not seen a correction in a big way in global markets also. So this is a pause which is needed, and we've had these pauses at every resistance levels. We saw a pause at 17,400, then 17,800, 18,000. Now at 18,200, 400, we are seeing a pause. The next would be at 18,800 next. So till the time we continue to make this higher top, higher bottom formation, the trend remains positive, and you want to buy the dips with a stop loss in place. And at one time over the trend, sometime the stop loss would get hit. Till that point of time, you'll keep the best way to ride this move has been keep buying these dips right from 16,800. The trend is still strong. So the view is same, buy at current levels a bit and add more on 100-point dip.
Andrew Holland, good afternoon. We may be off by 250 points from the recent high, but up about 1,500 points from the recent low. Do you think the gains what we've registered in summer of 2023 are durable in nature?
Yeah, I think they probably are, Nikunj. I think the only thing that would upset the apple cart at the moment would be, further kind of unintended consequences of the Fed rate hikes, and obviously the credit crunch you're seeing now in the banking system in the US. And the reason I point this out is obviously, whilst the Fed has kind of managed to kind of help on the banking sector, if this spreads through to the kind of commercial real estate or mortgage market in the US, then that's a whole bigger game to kind of get worried about. So I'm just slightly nervous in the short term whether some of these problems might just kind of be swept from under the carpet. So it's something to keep an eye on. The market itself is obviously kind of not thinking that the debt ceiling is going to be a problem. It would have played out, I'm sure, in the bond markets or currency markets. So everyone's pretty kind of relaxed about that. So it's really anything else which would be a negative or not thought of in terms of the unintended consequences, which would have obviously a risk-off trade. But by and large, as you know, when we've been speaking, we've become more constructive on our markets. We think interest rates are going to fall in the US very sharply by the end of the year, but more significantly because of the slowdown, which will help lower commodity prices, including oil. We think Asia has the ability to reduce rates a lot quicker, or a lot earlier, should I say. And the RBI should be able to do that in October of this year. So, that's probably why we're seeing, more monies come towards emerging markets, more monies come towards India, and the bond yields here, a 10-year bond yield here, well under 7%. So you're already baking in 25 basis points for October anyway. And I think that's what the market's responded to.
For equity markets, the US equity markets expecting that interest rates will come down before the year ends, then why is the 10-year paper jumping back again? It's at 3.45, 3.5. The bond market is saying that rates will go higher. The Fed officials are saying that there is no big case for a rate cut, but equity markets are telling us a different story.
I think the bond yields are telling you a different story, Nikunj, because the Fed rate is at 5%, right? So, but your 2-year and 10-year is way below that. So to my point of view, I think the only reason it's being elevated right now is because of the debt ceiling problems, and obviously the government or the Federal Reserve will have to go out and just build up their balance sheet a bit in terms of issuance. But thereafter, you're seeing a very, very much a slowing economy, not just in the US, but elsewhere as well. So I think we're going to see interest rates coming down sharply. So I think the market's got it right. I think the Fed's got it wrong.
All right, now where do we have? We have a bit of a reversal in Tata Motors. We've got a bit of a reversal in banks. We've got a bit of a reversal in real estate, and HUL, Marico, that good old FMCG space seems to be reversing. Naresh, has the tide finally turned for metals? Because in this rally also metals did not participate the whole hog.
So the metals have been a tough place, and now the momentum is shifting a little lower for even the best names. So Jindal Steel, which was getting closer to that breakout of 600, 610, tried to get closer to it and has corrected back. We are back to the lower end of the range. 530 is the low for the last 6 months. So 530 breaks, even the best of the name in the metal pack actually be giving way. Same is the case with Vedanta, which tried to make a small breakout move 2 days back, has not been able to do so. Something like Hindalco has been in a downtrend. Nalco, SAIL have not even picked up as such. But even the best of the names are actually not able to hold on to the supports. So been avoiding the sector, but would be difficult to short them given that some of the names have already corrected. So not looking at a short here, but definitely not looking at a buy as of now.
Like Jubilant Foodworks' performance, their margins, of course, were impacted, and clearly there were inflationary pressures in key raw materials, hyperinflation in the prices of cheese, vegetables, higher freight costs. All of that impacted them in the fourth quarter. Having said that, operationally, the PAT has fallen short of expectations, but the PAT and margins are actually in line with what the market was anticipating, which is why I guess you're seeing a positive reaction come by for Jubilant Foodworks as we speak right now. And it's quite interesting, right, Andrew, because you have a peer within the same industry, Devyani, Sapphire Foods. They've all fallen short of market expectations, and clearly the leader within the listed space at least, Jubilant, has managed to ride the tide.
Yeah, it has, but it's obviously, not been some of these stocks have not been great performers, and maybe there's a case of that. The bad news is in the price now, or has been in the price, and therefore you've seen a recovery. But within this whole sector, I mean, I don't mind the fast food sector at all, but I think within the whole FMCG kind of basket, I still think beverages is a place to be. I'm not just talking about alcohol; I'm talking about soft beverages as well. So I think that's where the big growth is coming from, and I think it's just being not really kind of recognized by the market yet. But I think we'll start to see as people keep moving up the kind of value chain in terms of premiumization, you'll see, better margins, better growth, for this subsector of FMCG. So I think beverages is still where I'd be placing my bets at the moment.
I also wanted your take regarding manufacturing and electronic manufacturing particularly, but before that, let's listen into the bite coming in from the management of Kaynes Technology. That stock is on fire today, 15% higher. The management is maintaining the guidance of around 1,700 crore top line in FY24, but overall PLI schemes, etc. has helped them quite a bit. Listen in to what they had to tell us about the company's growth outlook.
Next 4 to 5 years, it is all manufacturing in India. So if we can gear up ourselves, we are there. This physical, we will do around 25 crores of benefit, but the real benefit will come in the next year because our products are just getting finalized with our customers and we are in the last leg. So maybe from the next quarter onwards, small billing will happen, and going forward, it will increase in the last 2 quarters.
Essentially, our order book is quite balanced. It's not changed much from in terms of composition from what it was 1 quarter ago. But in terms of new RFQs, we see that new RFQs are in all the areas. They are in EV area, they are in industrial area, they are in IT area, they are in medical area, and also railways. So I would expect that both PAT and the EBITDA margins will be higher than whatever we have posted so far.
Sure. Andrew, this is one space which has been doing quite well. The order books have been swelling. There is this entire PLI scheme, Philip as well. Any favorites that you have in this space, whether, Amber, Dixon, Sirma SGS, Kaynes Technology, etc.?
I think they're all going to do well. I think, electronics has been one of our themes. And whilst, the company talked about the kind of domestic market, I think this is just going to be a huge overseas exporting opportunity as well. So this is a great place to be. And I think we'll see more and more companies move into this area over the next few years as well, because the opportunity is just so huge. So, I think a basket of these is the place to be, because they're all going to do extremely well, both domestically and I think increasingly through exports as well. So huge sector in the making.
Okay, so that's the take coming in as far as the entire manufacturing theme is considered as well. But for now, slipping into a very short break with the news that the market continues to reel under pressure. It's the banking space which is seeing quite a bit of a drawdown, 350 points lower for the Nifty Bank.
In conversation with our technical experts and Andrew Holland. Now, what is looking strong? Indian hotels? Andrew, everybody knows that hotel prices have gone higher. Everybody knows that it's difficult to get a good, weekend room in a good luxury property at a reasonable price. If everybody knows, then why is the stock going higher? I mean, shouldn't that be in the consensus?
I mean, I presume that everyone's thinking that the growth is going to continue, and that obviously, if you're getting more traffic through your hotels, you're going to be spending more money, and you make a lot of money on food and beverage. So if they continue to see that kind of occupancy rates, not just the kind of the room rate, but people spending money, is clearly what the market's banking on. And this is before really we see a lot of I would say kind of foreign tourists coming in as well. So there's still that part of the game to play as well for the kind of revenues of the hotel companies. So I think the other things that the hotel company's doing is is trying to move up again up the, for a lot of the hotels is move up in terms of the premiumization of what they're doing and how they're kind of bringing guests and treating guests and in terms of packages and so forth. So I think there's a lot changing in Indian hotels, which is under the kind of radar. Unless you really go and visit there and see what they're doing. But I've been traveling around quite a bit and staying in their hotels, and apart from impeccable service you always get, there's the restaurants are full, the bars are full, and people are spending money. So it's not just the hotel guests, it's outside as well. So that's where they're earning their extra revenues, and I think that's likely to continue. Given the consumption trends that we're seeing, and it's not likely to kind of fade away in the very short term. So I think the re-rating for the whole sector will continue.
Andrew, I'm going to split my next question in two parts: overrated and underrated. Give me a name, category, or a sector which is overrated, and vice versa. A name, category, or a business which is underrated.
That's to me, right?
That's right.
I can't really kind of do stocks, but I would say that overrated probably, even though it's taken a little bit of a hit recently, I still think commodities are overrated. I think everyone's still expecting to be up, pull up, and it could well be in the very short term. But if we're heading towards a downturn, then they're still overrated in terms of where the prices are going to be going forward. In terms of underrated, I would still say that the whole of that beverage industry is just I think been overlooked by the market, and I think we'll start to see that trend, in terms of re-rating of the sector will happen over the next 1 year. And as I mentioned previously, the electronics industry, it's very difficult to play. There's a very limited number of big players there. But I think that whole manufacturing story for electronics is going to be huge.
Okay, in the meantime, let's take stock of some of the other big movers as well. Credit Access Grameen is higher by around 9%, sitting at all-time high levels. And then on the other hand, you have names like PVR, which is sitting at 52-week lows and has been trending down for quite a few days. Kunal, your take, PVR, would you be a buyer after the correction, and Credit Access Grameen?
Not really for both of these stocks. PVR Inox, the stock has been selling consistently, so it's more of a sell on rise, sell on weakness for the stock, making a pattern of consistent lower highs and lower lows. I think from the recent correction actually started off for PVR Inox from 1800 odd levels, and the stock is almost now at sub 1400, which means even at a point when the markets were doing exceptionally well, the stock continued to get to a selling pressure. Indicators are not yet oversold, so I'll probably wait out for some more time to try and go for a contra trade on PVR. Maybe if the stock corrects another 100 rupees, 1250 odd levels, that would be a good entry point from a contra perspective. For Credit Access Grameen, I think that stock has shown signs of overbought nature on indicators. So today's gap movement, the spike in volumes the stock has shown today indicates that maybe it could get into a cool-off mode over the next couple of days. So again, a buy on dips over here for Credit Access, closer to that 1100 mark.
Okay, those are some of the buzzing stocks. And Andrew, that's been the other thing, right, as to how the exhibitors, which is only one entity now, PVR Inox, has fallen prey to the drying up of content or good content, which has hit theatres in the quarter gone by.
Yeah, I must admit I don't really kind of follow this company. As you said, it's only one company, so it's not high on my radar. And neither do I go to the movies that often. So I'm probably the wrong person to ask on this one.
Yeah, well, the only one within the listed universe, or actually the only one in the entire industry, barring the few small odd regional players that you may have.
Yeah, that's right.
Only
I
dominant
think,
one.
yeah, after the merger, it's the only play which is there as far as the exhibitors are concerned. But Naresh, your take on Hero MotoCorp, despite the weakness in the market, that stock has managed to rally, 5 to 6% this week itself. And on the other hand, you have Kotak Mahindra Bank, which has been on the back foot for a bit now.
So Hero MotoCorp is interesting. If we look at a little longer term picture, in the near term, yes, it is back to that 2700, 2750 mark. If we look at the last 1 year, the stock made a top around 2800 to 2870, at least 6 times over the last 1 year. And that has been a major resistance for the stock. The last time also it was promising almost just 6 to 8 months back, was hoping for a breakout, then it corrected and went all the way lower. Now we are again coming back to the stock at those levels. The stock pre-COVID also used to be at 2800 was a top, and the stock was available at 2800 back in 2014 as well. So it's almost been 8 to 10 years of hardly any returns for the stock. If this can change tracks and become a breakout about 2800, that would imply a long-term trend change for the stock. So Hero MotoCorp is very interesting to keep watching out for. It's become a buy on the short-term charts, a buy on dips going forward. If it can sustain about 2800, this would be an interesting stock for the medium to long term.
27-24. Aisha versus Hero MotoCorp. You compare Hero MotoCorp with TVS, it's a tale of two cities. One's gone down, other's gone up. Aisha, in fact, by the way, post numbers is really making a comeback. I mean, it is what we've seen in the SUV market last year has been a trend in the two-wheeler market in last couple of years, that Indians are migrating straight away to a premium motorcycle. It's no longer that you are migrating from cycle to 110cc, 110cc to 350cc, then a small car, and then hopefully a luxury car. But Kunal, that's a natural migration, right? No cycle, no scooter, straight away SUV.
Open SUV.
Urban. No, that is true. That's 40% market share, 40 to 50. I think that number keeps on changing on a monthly basis. Is the number of SUVs? You know, I was standing at a mall 10 days ago waiting for my car to come, which is a SUV, But the amount of cars which crossed when you're waiting for your car, it's 7 on 10 cars are SUV.
Yeah.
And out of that, 2 were luxury. So you pretty much know
Including
that
yours.
Mine is not luxury. I mean, luxury is 50
Of course
lakh
it is.
plus. No, 50 lakh plus is luxury in SUV.
Almost there.
Yeah, so I still have a aspirations. Why not? Aspirations and affordability. Aapke muh mein ghee shakkar. That's what I would
No,
say.
that's not what I was saying. What I was saying was how much your car costs is almost close to 50 lakhs.
No.
But anyway.
32 lakhs. Still a distance away.
Nonetheless, we'll discuss all of that offline. But for the online chat, let's focus on what's happening with the market. Tomorrow, we'll get numbers from SBI as well as ITC. And interestingly, FMCG index has been your top performer in the year gone by. The likes of right from Britannia to HUL to ITC, all of these stocks have managed to perform quite well. Nuresh, your take from the FMCG pack, what's the top bet?
So in this, the top bet would be Godrej Consumer. That's a stock which has shown a lot of leadership. Even after that Raymond deal, the stock corrected, retested 900, and slowly and steadily has made again a new 52-week high. Clear indication of strength out here. ITC was a favorite, but now the risk rewards are not great at current prices. So the stock has done really well over the last 1 year. So that's the only reason ITC becomes an avoid. Otherwise, the trend is still strong for ITC. So Godrej Consumer looks the most promising. Next, I would be watching out for Hindustan Unilever, which has gone nowhere for the last almost ever since that peak in April of 2020, when it made a top at 2500. We are still at 2600 odd levels for quite some time. So on a dip going forward, the short-term breakout did take place about 2600 levels. So again, if it comes back to 2600, it would be a buy on dips. As of now, at current prices, Godrej Consumer seems to be the best bet.
Whether it is Amber or Dixon or whether it is Keynes Technology, that space is just really, bubbling with solid price action and volume action. Real estate. Now, Andrew, conventional wisdom is that real estate, which stroke hard assets, they do well when inflation goes higher. Investors, you want to protect your purchasing power by simply buying into hard assets. This time, real estate stocks and real estate prices are going higher when inflation is coming down.
Yeah, and listen, if interest rates are coming down as well, this is another great kind of opportunity for the real estate companies to continue this kind of trend. Usually it's kind of that, they kind of overbuild and then there's a slowdown. I don't think I'm going to see that this time. I really don't. I think as our economy starts to pick up in the second half of this year, I'm talking about October onwards, and interest rates come down, I think you're going to continue to see, very, very strong demand for housing. And don't forget, we kind of overlooked that kind of whole affordable housing that's been taking place across the country, and then people with aspirations start to move ahead. You talked about it in two-wheelers, and and cars. And I'm talking about it now in real estate. I'm also talking about it in beverages. This is the trend that's going to continue, going ahead. And I think we're just overlooking some of these kind of themes which are playing. And you're going to get continuous re-ratings of this sector. There might be days like today when you see a bit of downturn, but I really do feel that this asset class, I think real estate will be good as interest rates come down as well.
VMart and DMart, well, they have one thing in common. Well, they have come out with poor set of numbers. In fact, VMart, I think for the quarter gone by had an operating loss, if my memory serves me right. DMart, again, numbers have collapsed. Andrew, would you be looking at buying into some of these so-called classic value retailers, VMart and DMart? They may be going through a cyclical patch of downturn, but in India, value retailing or Sasta Sundar Tekao concept will never die.
Yeah, no, it's not. I mean, retailing, I think, it's going through its own kind of challenges. There's some big players coming in, and there's, obviously competition is quite fierce. I'd rather play it differently. I'd rather play it through, who supplies the stores rather than actually, who's the retailer, because I think that's where you're going to make the money, which is. So I'm not so keen on retailing at the moment. I know there's a big move and a big trend for this to continue to do well, and I think some of them will. But as an overall sector, I just feel that the competition is getting more fierce, whether it's online or some of the bigger companies coming into these sectors. Just worries me. It doesn't make me feel comfortable at this moment.
Andrew, great to have you on the show today. Glad that you could take time out. Let's take some closing strategies on that note, as we're pretty much around the session lows. Kunal, what's looking good to trade?
So Glenmark Pharma is something which I would look to book profits on from the closing segment. I think that's a stock which has done exceptionally well. The last 2-3 days, the stock has taken a bit of a pause. So I think booking profits on Glenmark Pharma.
Naresh, what about you? What's the closing trade you are spotting? The question is for you.
Holding on to the same one, Coal India is the one which I continue to add. The stock is holding all above that 240 mark, short-term breakout done. Even in today's correction, did not see a fall. That's an indication of relative strength. So expected to do a follow-up move over the next couple of sessions.
Okay, on that note, we'll slip into a very short break that with the news that there's been a bit of a recovery in the market, at least above the 18,150 mark, but still very much in the red. Welcome back. Well, you're tuned into Closing Trades on ET now. Last 30 minutes of the trading session, and it doesn't look like there is a whole lot of recovery underway. Yes, we're off the lowest point of the trading session, but still 100 points lower for the Nifty, 250 point cut for the Bank Nifty, and the broader markets, which had been outperforming, are showing a color of red today. In fact, the advanced decline ratio too is favoring the declines. On the losing side, it's the financials. So Kotak Mahindra Bank, ICICI Bank, these are your top losers. And then, of course, there are other IT names, the likes of TCS, Infosys, etc., which are also on the back foot. However, having said that, Hindustan Bank has suddenly shown a bit of a spike. That stock is now sitting with a gain of around 1.5%. But let's discuss the top stocks which are in focus today with Dipan Mehta. He's a director at LIC Equities, joining us on the show. Dipan, we have been talking about the entire electronics manufacturing space and how all of those stocks are on fire today. Keynes, Amber, Dixon, etc. Do you have a favorite from this particular vertical? Anything that stands out to you?
Yeah, good afternoon and thank you for having me on your show. I think we tracked Dixon and Amber quite closely. And I think today stocks have gone up on account of numbers which came through from Amber, which were quite exceptional. And I think it clearly reflects that the heat that which we have been facing over the last 3-4 months, that at least has got extrapolated into higher numbers for Amber. And I think Dixon is going up based on that sentiment only, because as such, the commentary from Dixon and the last 2-3 quarters have been quite disappointing, and valuations also on the higher side. So I wouldn't like to invest in that stock at these levels. But Amber Industry, I think, really surprising set of numbers. And I think whatever expansion plans they have undertaken, those are playing out very well. They have certain new contracts as well, which have benefited the company. So this is really a surprising number. Last couple of quarters were impacted by higher raw material costs, But now I think that entire trend has reversed for them, and we've seen expansion of operating profit margins as well. Amber per se trades also at reasonable valuations, so maybe at these levels or slightly lower at a correction, it could make a good, interesting investing opportunity with the potential to outperform the broader indices.
Dipin, but one thing what we've seen about Amber and Dixon is that ultimately these are low margin businesses. Little bit here and there, top line is great, but the margins they get completely squeezed out. Isn't that the risk in buying these businesses?
That's right, Nikunj. But the potential for growth is so vast that the volumes, the way they are expanding, I think eventually they do get a lot of economies of scale as well. And on the whole, I think they are also pursuing this PLI, benefits or whatever opportunities are there over there. And that also is margin accretive. And yet the full impact of the investments made for PLI are not reflected for Dixon or for Amber for that matter. So yes, I know that the margins are on the lower side, but it's on a cost plus basis. So there could be a quarter or two where there's a mismatch where higher cost of inventory or higher cost of raw materials may have impacted the margins. But if you take a 3, 4, or 8 quarter kind of an average, then they will always have a similar type of operating profit margin year on year. So end of the day, I think they add a lot of value to the customers because it prevents the actual end customers from investing in manufacturing capacities. And these companies, because of economies of scale, are able to offer products at a much cheaper level. So when a new player comes in the market, or existing players, when they're evaluating buy versus make, then eventually because of the cost factors, they go with a supplier like Dixon or Amber and buy the product from these companies rather than actually manufacturing themselves. And the opportunity is massive. So I think these are secular growth stories. They can grow at 15-20% easily on a compounded basis for the next 3 to 5 years or so. And that's what is, I think, keeping investors interested in these stocks.
Right. Okay, for Adani Hindenburg case, of course, the hearing has been now pushed to July 11th. Let's see what that group of stocks are up to and whether they are seeing any excitement or not, because of late they had gone a little bit quiet and were in the red. Today too, Adani Ports is down about almost 0.4%. Adani Enterprises is the other one which will just come up for you on your screens. ICICI Bank, Kotak Bank, Infosys, TCS, Bajaj Finance, these are also dragging quite a fair bit. And Kunal, it seems like in the last 2 days, there's fresh pressure now building on to IT in specific, large cap IT that is.
Yeah, I think so. So that's what typically happens, that when the market gets into a corrective phase, the weaker sector, and within the weaker sector, if there are two divergent parts like the mid cap or the large cap, in this case, large caps were definitely weaker relatively, as well as with respect to the overall markets as such. So I think that's where traders, they generally tend to find it a lot more easier to try and sell, because the trend is still negative for these stocks, and to get a 5% kind of an average drop into these stocks would be a lot more easier as compared to maybe a stronger sector like an auto or banking, etc. So I think that's where the traders, they generally tend to focus when the view becomes a bit more cautious or negative. Now on the way up as well, even if the indices get into a bit of a bounce from say here on, I would still believe that the large cap IT stocks would tend to underperform. So I think it makes sense to go with the momentum stocks and the ones which have been performing, and within the IT stocks, it's still the mid-cap IT names.
What is reversed in an extraordinary manner today is Aurobindo Pharma. In the morning, narration, we were talking about how this stock has given a linear comeback. And right at the morning bell at 9:15, it topped out. 644 rupees at the open for Aurobindo Pharma, registered rate, now at 619. But you stretch the graph to 1 month, you would, or maybe 1.5 month, it's 380 which has become 620, even after today's correction. 550 is last 1 month. It was a 380. When was it a 380? 2 months ago?
Yeah, 2 months ago.
2 months ago. 380 has become 640 and then it's become 620. Is the trend in Aurobindo Pharma over? Is that rally which we've seen?
So, the rally can get into an exhaustion. So what happens is typically, Nikunj, after such a kind of a steep rally, it's bound to be that the stocks get into a pause for themselves. Now, in some cases, the pause could be multi-week. In some cases, the pause could just be a few days. Now, Aurobindo Pharma actually went into a similar kind of a pause, I think last week or so. So I think 26th of April, the stock hit a level of 615, and then 15th of May, so for the last 20 days approximately, the stock still remained into a band of 615 to 600, 590 approximately. So after that, the stock went into a breakout mode. So which means that it's trying to consolidate at the levels, and when it comes back closer to the lower end, which is 600 mark, that actually becomes a good contra buy for Aurobindo Pharma. So I would actually be of the belief that many of these pharma stocks could come back towards their key support points, and they can come back into a good contra buy territory back again.
Okay, in the meantime, wanted to just talk about some of the stocks which will be in focus tomorrow as well. SBI and ITC will report their numbers. So let's go across to my colleague to find out what the expectations are. First, let's go across to Harsh to try and understand what is expected from big boy SBI this time around.
Well, the net interest income number for SBI is expected to come in at 40,000 crore, country's largest bank, expected to grow NII at 28% on a year-on-year basis, very solid set expected. When we're looking at operating profit, 27% growth expected, 25,100 crore odd is where that number is expected at. Provisioning, even though Q3 was a low base, 5761 crore is what the provisions number in Q3 came at. In Q4, it's expected at 5,500 crore, so even lower in terms of that particular metric. And profit after tax continues to be solid, 1% plus ROA. Profit after tax expected around that 15,000 crore mark. So solid set expected. With regard to balance sheet, we're expecting good growth on both sides, 16% growth on the advances front, 6% growth on deposits. Deposits still is going to be an important metric, and how SBI plans to scale on deposits is also going to be important. So look out for that piece in the management commentary. Also with regard to margins, what kind of pressure they're facing on the deposit front, as well as how margins will unwind into FY24. Last we checked with the management, margins were expected to only get better in FY24, but of course that's an important metric to keep an eye out on. With regard to credit costs and provisioning on the MSME front will be an important metric as well. Keep an eye out for all of that as SBI comes out with its numbers.
Yes, we will, and the other important number is also going to be ITC. Vinny, what can we expect?
In terms of numbers for ITC, we are expecting a revenue growth of around 7% coming in from the company. Profits expected to see a 15% growth, while in the operating performance also we are expecting an improvement there as well. EBITDA margins expected to see an improvement and expansion of around 340 basis points. EBITDA margins expected at around 37% versus 33.6% last year. What is supporting this, EBITDA margin, gross margin expansion is that, mainly a softening in terms of the raw material prices that has happened, which is aiding the margins of the company. And other than that, obviously there's a better operating efficiency as well, which is supporting the margins of the company. Cigarette volume, an important number we keep an eye out on, that's expected at 13 to 14% this time around. Non-cigarette business also is expected to do well, so that's the hotels, papers, FMCG business, that's also expected to see a good growth coming in there. Hotel business specifically, we're expecting a robust growth, mainly because bookings have witnessed a strong traction coming in there as well. So keep an eye out on the hotels business. Agri business, on the other hand, that's one thing that we could be seeing a decline in terms of the revenue coming in for the company. So keep an eye out on that one. Factors to watch out for in terms of commentary coming in on the price hikes. Are they taking any further price hikes in the cigarette business? FMCG, overall the growth as well as the EBIT margins, that's an important number you keep an eye out on as well. Corporate actions, anything that will turn out, any commentary on the demerger of the businesses is something that you should keep an eye out on.
So the State Bank of India or ITC or both? Which ones do you like? I mean, these are two classic names which have potential to surprise us.
State Bank of India. ITC still, not convinced about the growth of the tobacco business. End of the day, the volumes are in low single digit, and they really haven't been able to scale up the other businesses to the same level of profitability. And the non-tobacco businesses, the contribution remains pretty minuscule. So end of the day, ITC would be as a tobacco company with all its legacy problems. And the stock has run up also significantly. So keeping the risk return profile in mind, it's one stock we'd like to avoid. But State Bank of India, I think we can look forward to exceptional numbers. These are absolute blue sky scenario for the banking sector, where they're getting the best in terms of net interest income and net interest margins. And at the same time, the credit costs are pretty much contained. Banks like SBI and the PSU banks are getting a lot of money in also through recoveries, which is flowing into other income, which earlier they had written off, now they are writing back those recoveries. That's also giving a bump up to their profits. So valuation is also pretty reasonable. So I'd go with between the two stocks, I would go with SBI over ITC any day.
ITC, that's the word. That's the word coming in. ITC currently holding out quite smartly. SBI, though, going quiet into its earnings. We will just connect back with Dipan Mehta, having a bit of an audio issue there. Okay, I think we can cut across. There's a cabinet briefing currently happening.
हो जिससे कि उनकी भी कैपेबिलिटीज बढ़े, उनकी कैपेसिटी बढ़े और फ्यूचर में डिज़ाइन और मैन्युफैक्चरिंग का कॉम्बिनेशन करके इंडियन ब्रांड्स डेवलप हो. इन सब को ध्यान में रखते हुए बहुत ही एक कॉम्प्रिहेंसिव प्रोग्राम आज अप्रूव हुआ है. इन टर्म्स ऑफ नंबर्स, IT PLI में the budgetary outlay is 17,000 crores. The tenure of the program is 6 years. Expected investment is 2,430 crore. और जैसा आपने टेलीकॉम में देखा, पहले साल में 900 करोड़ एक्सपेक्टेड था, लेकिन 1600 करोड़ इन्वेस्टमेंट हुआ. इसमें भी लग रहा है कि the way things are moving, इन्वेस्टमेंट जितना हम एक्सपेक्ट कर रहे हैं उससे ज़्यादा ही आएगा. Expected incremental production 3,35,000 crore. That will be the additional GDP because of this particular scheme. 3,35,000 crore ka expected incremental production. Expected incremental direct employment is 75,000. So 75,000 expected incremental direct employment. और आप जानते हो डायरेक्ट और इनडायरेक्ट में इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग में 1:3 का रेशियो रहता है.
Okay, so that's a cabinet briefing talking about the comprehensive scheme that they have developed for PLI electronics manufacturing. So, of course, that space has been active throughout the trading session as well. But the other stocks which are doing well is also some of these battery names, right? So, Exide Industries, for instance, is up around 6%. Amara Raja Battery is also showing quite a bit of traction. Naresh, would you be a buyer in either of these names?
So Exide looks promising for the fact that it has seen good volumes, price action, and finally made a high above that 200 mark, which was a resistance for the last almost 1.5 years. So at current levels, that's a clean breakout, relatively better than Amar Raja. So out here, the pre-COVID price also for the stock was around 200, 205. So interesting long-term breakout out here of our Exide. From here on, we could expect a first move towards 220, 25, and then maybe a review again. But for now, 200 to 205 is a good buying zone for Exide.
Right. Okay, a couple of other buzzers in trade. While, of course, the Nifty is closing in with an over 100-point fall, 18,230 is where we're currently hovering around at. Bharti holding a smidge in the green. ITC ahead of its numbers tomorrow. SBI is completely flattened out, as is M&M. There's Hero MotoCorp, which is looking strong, and then Hindustan Bank as well, which is actually holding out in trade as we speak right now. Unilever, HDFC Bank, L&T, Kotak, Infosys, Wipro, Tata Motors, they're all having it weak. Kunal, what about the charts of Tata Motors? I mean, after the earnings, of course, there was a huge spurt, but in the last 2 days, this stock also has been seeing some profit taking.
Yeah, something similar, which, with what I said, that when the markets are getting into a zone of profit booking, the stocks which have done exceptionally well, especially the large cap names, that's where the stocks would get into profit booking mode. But then we also have to remember that this may not just be a major trend reversal, because the entire auto sector is still looking very charged up. You still have other names like Eicher Motors. I think Hero MotoCorp did pretty well today. Ashok Leyland looking quite strong. So when you have other candidates which are balancing off from a sector, it's bound to be that the ones which have performed exceptionally well, they could go into a period of pause. So I think a similar phase of pause for Tata Motors. I think at current levels of 515, even at 500 levels, which is a good round figure support for Tata Motors, I think that could be a good buy for a short-term play for Tata Motors.
It's turning out to be a very, very good day for some of these electronic manufacturing companies. This is a very small thing, but you got folks who've taken really big bets in it. Sunil Singhania, Ravi Dharmashi, a lot of PMS guys have bought, very, very aggressively into, some of these electronic stroke component manufacturing names. Oberoi Realty is down 6%, but it also saw a run up, which again has been, quite breathtaking, so to speak. But what has turned Naresh in my book is Jubilant. Markets were working with a number of 4% to 5% decline in same-store sales. What they've reported is a flat number. Do you think Jubilant FoodWorks has turned the corner?
Action, finally, there is some follow-up today. For the last few sessions, it broke out above 460, but got paused at 475. Today's price action above 475, 480 indicates the momentum is back. Also, the last time that the stock saw a very sharp correction was, I think, around the last quarter results when the stock fell from 500 all the way down to 450. So I would expect the next resistance for the stock to be 505, 502 levels, which was the high on that day. So that's an initial target, but overall, the stock seems like a short-term bottom is in place and we could slowly and steadily trend up. Given the volatility of the stock, I would keep a stop loss at 475.
Ask this question to the previous guest, Andrew. Overrated sector, underrated sectors. At the current juncture, if you have to define one name or one company which is overrated and vice versa, which is underrated.
Is that question for me, Nitin?
That's right, Dipin.
I'm sorry I didn't get a full question. You overrated, underrated in terms of a particular sector or on the whole? I mean?
Market, a company or a name which is overrated and similarly underrated.
Across the spectrum of stocks, is it?
Yes.
I think in terms of overrated, I think a lot of the cement companies are very overrated, starting with the market leaders, Ultratech, ACC, Ambuja. On the whole, the cement stocks, the valuation which they are trading at, and looking at their business model and the kind of competition, their inability to pass on cost increases, and the kind of expanded capacity which can come into play and maybe cause a glut in future. I would say that all cement companies to an extent are overrated. And the underrated stocks, I think, would be the engineering construction companies. We saw the numbers from last year in October. I was a bit disappointed with the operating profit margin. But there is fear to engineering construction companies, the likes of, say, ITD Cementation or NCC, CSC Projects, KNR Construction. I think all of these are at a very interesting juncture. They have huge order book position in place. Valuations are reasonable. And a lot of the balance sheets of these companies has improved significantly in terms of lower debt. And there's a value unlocking opportunity if they are able to pass on some of their HAM projects onto InvIT or to external players. So I think that's a bit of an underrated sector, unnoticed also, if you consider the kind of visibility which is there in their order book position. And with stable input costs, I think you'll see expansion of margins for these companies as well.
Some of the construction stocks Kunal did well. We haven't spoken about it, but let's say in NCC, IDT, Cementation, Ahluwalia, they did rather well. I mean, they've outperformed from December to now quite handsomely.
Yes. So I think in this phase, many of these mid-cap stocks which were due for their breakout, they've managed to successfully give that breakout as well as, chart much higher returns for themselves. In fact, NCC, I remember, I think was struggling at the zone of 75, 76 for, many months. And post that breakout, the stock not just broke past about the 100 levels, but I think came back towards 120, 122. That was the previous swing high for NCC. So, these stocks are not just giving signs of a breakout coming out of consolidation, but they are moving up significantly higher from those levels. So there's a buffer which has been created for these stocks. Even if, there is a mild correction or profit booking, these stocks would still be significantly higher from their previous support level. So I think that's a very good sign, more of a comfort sign for traders who have bought at the earlier levels of breakout. I believe now 100 levels is a very good level, for example, for NCC, which is a very strong support. And I think closer to the 100 mark, even if the stock dips, that could actually become a very good contra buying opportunity.
Right. Okay, that's the take coming in on some of the construction plays. Winding down on trade. But today's rank underperformers obviously have been Oberoi Realty, Jindal Steel, PVR Inox, and then LIC Housing. All of them earnings reactions really. On the flip side, Jubilant FoodWorks, by the way, is now sitting at the highs of the day. It's a solid 4% move that you're seeing on Jubilant as we speak right now, even though the numbers were largely in line. Chambal Fertilizers, Ramco Cement, and then Exide, which has shot up about almost 6% as we speak right now. It's seeing quite a bit of move on that stock. It's about $10 higher as we speak right now. Amongst the large caps, of course, the list is much smaller. There's only a Hero MotoCorp and Hindustan actually, which are over 1% gainers. Besides that, Bharti, BPCL, ITC, UPL, Adani Enterprises are all less than 1% kind of moves. What's cracked today, of course, is selective metal plays. So Hindalco, Tata Steel are both down. Large cap technology, of course, has been weak. So HCL Technologies, TCS, Infosys, Wipro, they're all rank underperformers. And then private banking names like an ICICI Bank, Kotak as well have fallen quite a fair bit. L&T couldn't do a whole lot. Axis Bank as well has closed in soft. And then Reliance too has been down about almost 0.5%, which by the way is now sitting sub the 2450 mark in trade as well. Kunal, a quick call on Reliance before we wind up for the day.
Nothing major on charts, frankly, Aisha, because the stock is just still lying low at the 2,500 sub 2,500 levels. My only sense is that maybe the stock is getting into a consolidation, but if it comes closer to 2,400 mark, that could actually be a good opportunity to buy Reliance Industries. It's not that the chart structures have weakened significantly, but it's just that the stock takes a lot of pause even after a 150 point rally for itself. So I think that's if that's the kind of a chart pattern, then it's always better to buy these stocks on dips, wait out for the momentum. Once the momentum peaks out, good time to book out profits. So 2,400 levels could be a good zone to buy Reliance.
Okay, so good zone to buy Reliance, but for now that stock is languishing in the red and so is the market. That's how we are shutting shop for the day. Nifty below the mark of 18,200. The Sensex 2 down in the trading session by almost 0.5%, and the Bank Nifty down about 172 points. The broader markets managed to eke out small gains as far as the small cap index is concerned, but mid cap just going home with a cut of around 0.05%. In terms of the stock, Hero MotoCorp, Hindustan Bank, ITC, UPL, these were the top gainers. Losing side, it was the banking heavyweights, the likes of Kotak Mahindra Bank, HDFC Bank, ICICI Bank in the red, and then IT names like TCS, HCL Tech as well. From the broader markets, however, of course, these electronic manufacturing companies deserve mention. So Keynes Technology, Amber Enterprises, result reaction there. Credit Access Grameen was another result reaction. And then, of course, you had names like Exide as well as Amara that were doing well in the trading session. On the losing side, PVR continues to languish in the red, goes home at the 52-week low level, and Devyani International disappointed the street with its performance, so a cut of around 4%. So overall, a day where the bears have had the upper hand versus the bulls, but let's see how tomorrow tracks, because for now, it's curtains down on this edition of Closing Trades.